talk about this a lot. I think we've got 6 years to make as much money as we can right now, because I have no clue what the world looks like, but I don't think we're going to have an opportunity in financial markets in the way that we do. I think we can earn tokens. I think, community-based stuff, which is what I think memes are testing, works. I just think the jobs that we grew up in, it's gone. It's going to be gone. 6 years. I'm not sure it's going to be the biggest trend this cycle. I think we'll talk about it a lot. We'll see some speculative activity in it. By the next time around, we're going to have a choice. We simply have no choice. And it's going to be a race. And it's going to be a race at sovereign scale. So this is a mega use case for Bitcoin, for blockchain, that people just don't understand. They still think it's meme coins. All of this is testing the big game, which is all of finance and all of the internet.
Raoul Pal starts by analyzing the political and economic cycles that emerge during election seasons, highlighting the ways in which these trends typically affect financial markets. He highlights how a key element influencing market behavior during these periods is the increase in liquidity. The need for liquidity to help manage financial obligations and boost economic growth has never been greater as pressures to refinance debt have increased. However, Raoul draws attention to the fact that China has contributed an astounding $8 trillion in liquidity, a development that many in the financial industry have mostly overlooked. Now that the capital is starting to return to international financial systems, this undervalued liquidity inflow is laying the groundwork for a possible market rally. Raoul also points to the historical pattern, which states that an election year typically brings in what he refers to as a banana zone rally, which is a time of intense, speculative market activity that typically lasts until March. Before we dive deeper into Raoul's insights, please take a moment to like this video, subscribe for more finance and cryptocurrency content, and now let's hear his following words.
Seasonally, it happens. Almost whoever wins the election, using the everything code cycle, we're in the peak kind of debt refi cycle, so you need liquidity to come in. I actually did the maths in Global Macro Investor over the weekend. China's added $8 trillion of liquidity via both state sector and via M2. I mean, people don't realize. So liquidity is back. Everything was in place. And then we've got this other thing, which we'll talk about how the cycle plays out, but we've taken the big overhang off, which is like who's allowed to do what. And, that is a big deal. And there has to be a re-rating, not just on liquidity, but a potential re-rating of the sector. So it's a big deal. I went back to look at these same periods in the election years and all of this stuff. And basically, the market goes bananas all the way until March. And then somewhere March, April, there's tax season. And everyone's going to have to pay Uncle Sam and Her Majesty, or His Majesty. And they have to start selling a bunch of stuff. That seems to happen every time where you get a pullback. And then it's going to depend on global liquidity. If it's still strong, then we end up with a strong pump into the end of the year. If not, we kind of get something more like last time. But yeah, I mean, I'm just thinking it's banana zone all the way through till March. Traditional markets, they tend to sort of forward price it as soon as it gets to the news. Then you get, a corrective period. But because the flows won't come until the new year, right? And we don't even have a new government in. So really the flows don't come until later, because you actually need to see the regulators. It's not like Goldman Sachs can go, oh, great, Trump's in, we're all free to do what we want. They won't. They will have to wait until we're given new regulation, etc. So it kind of increases the odds for me of a larger 2017 style year-end rally next year, as opposed to the stunted cycle. Now, it depends, because the Fed trumps all. If they remove liquidity earlier in the cycle, it's game over. So there's this balance here. But I think there's the potential for the blow-off cycle top because it allows other people to come in. If we go back to 2020, it was exactly this time that ETH started properly outperforming. It's again the same point in the cycle. And if you play through, and I wrote a thread on this yesterday, is ETH is where institutions will build, whether it's on layer ones or layer twos. But that's where DeFi is. That's where institutions are not going to get fired for. It's the kind of Microsoft of the space. So I do think as regulation frees up, ETH is going to get a lot more activity than people yet understand. So I think it's a good thing. And they've built it for scale. But the layer twos, if there's not much activity going on, then the price doesn't do well. But if you can start bringing the financial institutions onto this space, ETH is the most likely candidate for it at scale. Every time we get to this point in the cycle, Bitcoin dominance collapses. Risk-taking, and now with the new government, risk-taking is going to be rising. Also, the other thing that I found the main driver of alts versus Bitcoin, so i.e. the inverse of dominance, is actually driven by the ISM survey, business cycle. Makes sense, because if the business cycle starts going more positive, because it's been very lackluster, what we tend to find is that risk-taking increases because people's disposable income goes up, their businesses earn a bit more money, everybody feels a little bit better. And that drives the same as small caps versus large cap outperformance. It's basically the same trade. You see it in credit markets as well. It's all the same trade. So it's perfectly set up for that now. All of our forward-looking indicators suggest that the ISM from here starts climbing above 50. 50 is the really big signal for the alt season. I'm not sure it's going to be the biggest trend this cycle. I think we'll talk about it a lot. We'll see some speculative activity in it. By the next time around, we're going to have a choice. We simply have no choice but to hyperscale digital ID, digital sources of truth, everything. And it's going to be a race. And it's going to be a race at sovereign scale. So, yeah. This is when I look at my forward projections of blockchain adoption just by using wallets. And by 2030, I get to between 4 and 8 billion wallets. And that's because it's going to come out of this stuff. This is a mega use case for Bitcoin, for blockchain, that people just don't understand. They still think it's meme coins. All of this is testing the big game, which is all of finance and all of the internet.
Raoul Pal examines how artificial intelligence, AI, has transformed the financial and jobs sectors, highlighting how urgent the changes that lie ahead are. He estimates that before AI-driven automation changes the economic landscape, we will only have roughly 6 years left to benefit from traditional financial markets. Raoul predicts that powerful AI, or even artificial general intelligence, AGI, could revolutionize investing and asset management by automating complex decisions using vast amounts of data. This shift may drastically reduce the need for human analysts and traders, as highly efficient algorithms take over. According to Raoul, many finance jobs that have been central for decades could become obsolete within the next 10 years, marking a major turning point in how wealth is created and managed. We'd love to hear your thoughts on this. In the comments below, let's return to the interview and hear his following words.
So it's currently a $66 billion market cap. I think this bull market, the whole space will end up being 10 to 15 trillion, somewhere between that. So how much is Coinbase worth? I mean, it would not surprise me if Coinbase was worth $500 billion.
That's crazy. That's $66 billion.
It's insane. It's so cheap.
Mental, isn't it? Yeah.
Yeah. Considering the size of the market that's already there. I know. And I see people do it. I see friends of mine do it already. They're in the pump.bum trenches looking for the 500k thing. I'm like, please don't do this. You will literally not make it. You just won't. But
do it on a very small amount. Do it on a very small percentage of your portfolio if you have to, but don't let it affect your core positions. A lot of people who do
that just can't help themselves. They sell more of their soul and they keep buying more, and they sell more soul and buy more. Next time I'll get it right. Next time I've been 100x. Before you know it, their soul pile is down 75% and they've made no money in memes. I'm more thinking of the actual contract itself. So, let's say it's a call option on Turkish government bonds, or that's just an NFT, right? It's straightforward. It can settle. You put that in code. The real issue is, it was the question that people asked me is, well, surely somebody who gets AGI just wins markets, right? And they're worth $10 trillion and we have to shut down markets. That's the exaggerated answer. But the reality is they're true. Is by the time we hyperscale AI agents and something closer to AGI, there's no place for us in this stuff. And I'm not sure what markets are then, because they're so priced on so many factors. I know people still think, but discretionary macro forward-looking stuff. I don't know that that's not going to fall as well into this whole AI pit. So, I talk about this a lot. I think we've got 6 years to make as much money as we can right now, because I have no clue what the world looks like, but I don't think we're going to have an opportunity in financial markets in the way that we do. I think we can earn tokens. I think, community-based stuff, which is what I think memes are testing, works. I just think the jobs that we grew up in, it's gone. It's going to be gone. 6 years. It won't. It'll just be in your speakers around your house. It'll speak to it like this weird mentor shit. We build science fictions called hyperstition. And what you do is you create a future that you've envisaged. And we will almost certainly do that. So we will just go, Siri, tell me this and do that for me and do this for me. But also, you see the robot dogs, and Mark Andreessen was talking about he's got 2 robot dogs already.
Yeah.
They are just the pointy end of the spear for the machine. We've already got Roombas. So we've got a robot that cleans your house. You'll have a robot that mows your lawn, a robot that tidies your house. We've already got dishwashers, which are robots that clean your dishes. It's not that big an ask for all of this to change. Tesla's going to be your car drives itself. In fact, it generates you revenue by acting as a taxi when you're away on holiday, you're in bed. So, yeah, I mean, it's just coming so fast. And all of these payments, crypto rails are a damn sight easier than trying to get your Tesla car to have an account with, Cayman National Bank that requires your birth certificate of your entire ancestry before they even open an account for you, and then reject you anyway.
Raoul Pal sees the financial industry evolving quickly due to the exponential rise of technology like cryptocurrency and artificial intelligence. He projects that the market for digital assets as a whole will grow significantly, rising from a market valuation of $66 billion to $10 to $15 trillion during this bull market cycle. Given the size of the market potential, he believes that businesses like Coinbase have the potential to develop significantly in this climate and perhaps achieve valuations of up to $500 billion. But Raoul also cautions against the temptation of high-risk, speculative tactics. According to his observations, some people lose a significant amount of their money after being fascinated with the idea of achieving rapid returns. He says that this kind of conduct can result in people pursuing greater profits at the expense of long-term prosperity, frequently leaving them with nothing. Raoul talks on how AI and even advanced varieties like artificial general intelligence have the potential to completely transform markets and finance in the future. This might lead to the automation of investment choices to the point that traditional finance positions become obsolete. Before the landscape drastically changes, he thinks we have roughly 6 years to maximize wealth in traditional markets. Markets may be dominated by AI by then, making it impossible for human investors to compete. If you want to stay ahead of these developments, make sure to like this video, subscribe to the channel, and turn on notifications. We're here to keep you informed and prepared for the future. Share your thoughts in the comments below. Thank you for watching, and see you next time.